Good evening, traders. Welcome to the Sunday Open. I am your host, Craig Shapiro, macro strategist here at NinjaTrader Live. It is Sunday, March 15th, and we are in the third week of war. So we got a great panel for you this evening, waiting here for futures to open. Look, plenty to go on, plenty to discuss. And we have Pax checking in. Oh, here we go. I'm just waiting for the open there. Sorry about that. Crude's up 3.6% to 102.32. S&Ps are weaker, not surprisingly, by 30 basis points. NASDAQ 37 basis points. The Russell 58 basis points. Bonds are selling off. The dollar's a little bit bid. So look, it's the same type of open that we've been seeing for the last few weeks here. Crude oil kind of driving the show. VIX higher. Dollar stronger, bonds weaker, equities weaker. We have a fantastic panel for you this evening. Sarah checking in from Florida, Farm is checking in from Arizona, and Pax from Chicago. How's everybody doing on this Sunday Open?
Great.
Good. I'm excited for a volatile week, hopefully.
Well, it opened relatively flattish.
I mean, it's a little bit more quiet maybe than not. I mean, there was plenty of headlines to get to and to discuss over the weekend, and we'll get to it throughout the course of the evening. What we like to do on the Sunday Open is go around the room, check on the different asset classes, get you set up with different levels and trading setups, and get a sense for how people are thinking about the week. But before that, I just want to make a special programming announcement that tonight we are, after this show, premiering the Crypto Closeout, which is a new weekly live show that's going to be co-branded with our parent company, Kraken. It's going to be hosted by Trader Mayne and Ponzi Trader, and it will be 1 hour of live crypto market coverage, professional trading setups, and sit-down interviews with leading respected voices in the crypto space. Tonight's special guest is Follis, the founder of Chroma Trading. So stay tuned for that after our show at 7 p.m. Eastern. But let's take a look at the open here. Sarah, maybe we'll kick it over to you to start. How are you thinking about the indices to head into this third week of March, an all-important expiry week, Fed meeting on Wednesday as well? Plenty to get to. How are you thinking about the setup for the stock indices?
Cool. First, I want to say I really love the addition of the crypto to the NinjaTrader team. I think that's really cool and something that we definitely needed. So I'm excited to hear from these guys and see what they have to say, hear their takes. And I think it's really cool. I'm excited about it. So I'll be watching tonight. We just can't get anywhere. We're opening inside last week's range on everything currently, which can be a good thing for right now. But it's just to me, it's been difficult trading. You kind of have to change your bias from day to day, sometimes even from hour to hour. It's just been, Friday was gross. It was just like Wick City all day. So I'm just kind of taking it easy. If we go to the higher time frames, you can clearly see your bias and where price is trying to go. And price is trying to go to last quarter's lows, which is at 65.83 on ES. So it's trying to go outside quarter, meaning like an engulfing bar. NQ did take out last quarter's lows, but is failing to stay below them. And then RTY on the quarter, just kind of lollygagging near last quarter's close, not doing a whole lot. And then YM is also trying to go outside quarter. It's just we're getting nowhere really fast. Like it's still very, very sideways. We've been stuck in this range for a long time. Now we're stuck in this big giant candle from, I think that was Monday. Yeah, last Monday. We're basically, we've traded completely in Monday's range all week. So we're really not going anywhere. So I'm kind of more being very picky and selective. And usually I have a bunch of weekly setups and things that I'm looking for, but without the futures help, as far as like other stocks go, I haven't had a lot of clarity. So just kind of taking it easy, sticking with the things that are moving, such as oil, because those obviously have a clear direction. And that's just kind of what we've been doing, just focusing on smaller day trades, not swinging right now, and just taking it, as we can and trying, to keep our risk good and not do anything silly in this environment, because it will get easier. I know the VIX is higher, but the trading still to me is not that easy. It's just because we're like I said, we're stuck still. So
earlier this year, we have been talking about the divergences between the indices. I'm curious. I mean, from what I see, it seems like indices are moving in a little bit more of a correlated fashion. Implied correlations have started to move higher over the course of the last couple of weeks. Are you noticing in the charts that the indices now are starting to move a little bit more in a similar fashion?
I would say yes, because almost everything is below last month's lows, except for NQ. NQ is not below last month's lows currently, but everything else is, and they are kind of all trading like similarly. So last week we had a bunch of what we call in the strat 2 down weekly candles, and they all closed as 2 down weekly candles. So they're all kind of doing the same thing, which is, just kind of a bunch of nothing, but yeah, but they're all nicely correlated right now for sure.
Yeah. I'd be remiss if I didn't ask, the tacos on your chart. Is that a particular price level, percentage move down? How are you thinking about it? I obviously have fundamental reasons why I think a taco could come or what might cause it, but I'm curious how you're thinking about it here.
I'm just using the tacos as a fun little target. Like I was saying with NQ, like or ES, we're targeting last quarter's lows, which is this blue line. And we've got this double bottom there, and what we say all the time is double bottoms are made to be broken. They might be support for a minute, but they're going to get broken. So that's just a target. It's just a fun little target.
Yeah, gotcha. Pax, how are you thinking about the open here? How are you thinking about the setup for the week? Plenty of news, obviously a very news-driven tape. VIX is elevated. Fed is this week. Options are this week. Got the roll this week. A lot going on. How are you thinking about the start of the week?
This shit isn't going higher. Not in the broader sense. We have so the correlations for me, I guess, is that Sarah. Let me organize my thoughts. So Sarah was talking about how the NASDAQ is trading above last month's lows. Last month's lows, I think, were 24,230 something. And they're a little bit above it, but the S&P is solidly below it. I think last month's, I got to look. Last month's lows, I think, were 67.75. So, or 51 or something. I'm not looking. I'm talking. I don't want somebody to correct me and say you're wrong month, Pax. Yeah, 67.51.
67.51.
Yeah, so we are solidly below that. But if all year long, the NASDAQ has been considerably weaker than the S&P. The quarterly pivots in the S&P is the quarterly pivot is 67.96. The quarterly pivot until Friday. The quarterly pivot in the NASDAQ is 25,132. The NASDAQ has, I think, like 18 closes for the year underneath that level. The S&P's got 3 or 4. I think 3. So the relative weakness that we're seeing in the S&P is just the S&P catching up. Now I want to see, like everybody else, and Sarah's 100% right. At least from my angle, the direction of the market is very clear. But the intraday trading has not been easy. You sell them, you get stopped out. You sell them, make a little money on them, you get stopped out. You sell them, you got to take them overnight, and the market gaps down or it trades lower. And there's too much risk in to your point, Craig. There's too much headline risk in wartime. So, it makes it for a kind of a difficult, choppy trade. And, it's rollover. I talked a lot about this on Friday in my show is, during rollover, it's not so much about price discovery as it is about rolling open interest. And, and there's a lot of open interest to roll. Now, that since 2020, since actually like 2018, 2019, the rollover has been a much better trade than what it was for the majority of my career. During those 2 weeks, I go to my lake house in Wisconsin, or I go to our house in Arizona, in Scottsdale during those 2 weeks and not trade. But since 18, 19, that's changed. Or maybe COVID. Maybe it was COVID actually that changed it. During rollover, it became a great trade because rolling that open interest has a way of exacerbating the volatility. So if we have some strong momentum to the upside, we're going to really go higher, and we'll take out some old highs, and we did that 2020 late in the year. We ended up rallying. If I'm right, you can look at a chart and tell me if I'm wrong. We rallied in December expiration. I remember the low of the year that year was in the S&P was 2174. We rallied from I think like 36 even to 3758 during rollover because we're rallying and stimulus and here we go. I think we settled out the year in 3756. So that's just it's just really good upside momentum and volatility. Now on the other hand, yes, Friday was a very good example of short, a nervous market during rollover. We opened at 67 something, I can't remember what it was, and we just 67 like evenish. I forget what the open was, and we just melted lower all afternoon. It just kept drifting lower until we closed below last quarter's quarterly pivot in the S&P, which is 66.58. So under 66.58, we want to trade down to, those levels I call macro zones that are just levels that don't change, to 65.89, which takes us to the low of the quarter of this quarter, 65.84-ish. And then down underneath there is going to be 65.25, which I know Farm is going to talk about. That's November's lows. And once we get through there, you will see some gigantic gas stops. And underneath 65 quarter, I don't think anybody wants to be a buyer for a little bit of time. There's going to be huge stops underneath there that's going to run the market down very, very quickly. So what is kind of a tough trade on the downside at this point is not going to be so tough once we take out those lows. There's going to be a huge uptick in volume, and it's going to continue to go. Now, one thing I want to talk about, too, also in volume, if you just put up a daily chart and you have a volume bar up, you can very easily track each quarter's rollover, okay, in the indices, because there's a huge spike in volume, and most people have no idea how to actually interpret it. They start to look at it from volume profile or market profile ways, and don't, because it's too much thinking. This whole thing here is just rollover, okay? Now, again, volatility will be exacerbated, and we can see all kinds of moves take shape that otherwise wouldn't happen. Just on the reopen, the opening print for the week is 66.08. The low of the week so far is 66.08. That is a bull open. That's a bullish sign. That's a bullish open to the week. The low of the opening print and the low of the week are the same. Do I think it holds? Who knows? The market's under tremendous pressure. I don't think we're going, if we do go higher, I don't think we're going significantly higher. I think that the market is under tremendous pressure, and that doesn't mean that we don't rally back up to 67.27 or 67.96. We have the Fed Wednesday. We've got expiration Friday. We've got all kinds of reasons for this market to move outside of the war. We got credit issues. We got all kinds of stuff. Got Bitcoin rallying. There's all kinds of interesting things going on. Gold's taking a bath. Dollars bid again. Bonds are getting killed. I'm short the 30-year bond. So there's a lot of interesting things, I think, happening in these markets, Craig.
Yeah. No, I think, to that point, there's been a tremendous amount of news, but many feel like the S&P and the indices just haven't moved all that much, right? I mean, do you get that sense? I mean, for me, it looks like what we've seen is options expiry week has held the S&P together, right? It's been this dynamic where we've seen a lot of dealer buybacks of hedges. We know the zero data expiry options are every day. We have VIX expiry on Wednesday morning. There's been tremendous negative gamma in the VIX, and dealers are trying to hold on to make sure that the VIX doesn't explode higher on them, before Wednesday, because there's tons of positioning up higher at 30 and 35 for March expiry. That positioning needs to come off the board. And I think once it does, you're going to find that the indices start to trade to more reflect what I think has been going on in the macro. But from your perspective, are you surprised that, minis haven't really moved like they quote unquote should have given the headlines?
I don't know. I don't think like that. I don't think it. I am surprised we're not lower. Yeah, I am surprised that we are not. Crude is over $100 a barrel. Yeah, I'm surprised we're not much lower. Yes, much lower. Yeah, like 6,400, 6,450 to 6,500 lower. But from a trading standpoint, I'm not going to. I feel like I'm talking out of both sides of my mouth. I am surprised, but from a trading standpoint, during the trading day, I'm not going to focus so much on that. I'm just going to focus on what the market is doing. I tweeted something last week that got manipulated. The markets are manipulated. I mean, okay, so what? What's that going to? What impact does that have on me? I want to trade what's in front of me. I need to, and that's it. I trade what's in front of me. I trade what my process gives me, and like we talk about every week, with Sarah, and Farm and everything that we talk about here, whether we see things the same way, we see things similarly, or we see things differently, it always comes down to trade definition. If you can define your trade, if you can define your trade, knowing where you're going to get out for a loss and knowing where you're going to get out for profit and knowing how you're going to add for a profit, then you can take the trade. So the upside, I'm bearish, but this is a bullish start to the week. And, okay, I'll trade that.
Yeah.
Reluctantly.
No, look, I think that what the dynamic that we have is we have oil up, vol up, dollar up, equities down, bonds have been down. And it seems like given the magnitude of the moves, where the VIX is above 27, where oil is above 100, you would have thought that S&Ps would be down, to your point, below 6,500. But I think this dynamic that's in play with respect to expiry has been keeping the tape held together a lot better than normal. People have to respect these structured product flows that are really the single biggest driver of S&P flows. Right. And it makes it more difficult to have the indices, trade off like that in a week before expiry and certainly into the run up into expiry this week. So, but once that positioning is cleansed and a quarterly expiry has a ton of, we're going to have the biggest options expiry period ever. Well over 5 trillion of notional come off the board as with the VIX on Wednesday and the rest on Friday. The market has the ability to trade more, or to trade truer, I guess, at that point, it's provided that crude, VIX, and everything else kind of holds in there. So
that's interesting. And that's exactly the way that I see it. Now that's the way I always see it. The market during rollover sucks. And volatility has a way of being exacerbated. So there's good trading, here and there. But I mean, things trade differently, to your point, Craig. But they always trade in the new contract. There's new capital flows that come in, either up or down, whatever. We'll have new levels and new quarterly pivots to talk about next Sunday. But there's always new capital flows going into the beginning of the new contract, which starts next month. Well, it starts really this week, but after expiration next Monday, new flows. And then going into the new quarter a week later, right, there's going to be all new cap flows, and the market is going to trade a lot better. That's why I would take these 2 weeks off until rollover. Now, one point I want to make too is I've been asked a lot if like zero DTEs have changed the markets, or people tell me they do. And my response is always no. They have. They certainly have. But in my mind, I don't care. Again, I don't care as long as there's an open, a close, a high and a low. And there's a range. That's all I need. So I really don't. I trade what's in front of me. I trade my process. I define my risk. Like Sarah and Farm and I have always talked, right? So from a trading standpoint, but from an investing standpoint, I have to pay attention to those things. So there's a lot of interesting things happening. And I'll tell you what, the better trading will be, at least from a swing perspective or a trend perspective, will come in the new contract. This contract's over. That doesn't mean that we don't have residual volatility based on news, but contract's over.
Yep. Want to shift over to Farm here. Farm, I know you're in the process of shifting over some of your charts, but what's the outlook here for you as you think about equity indices to start the week? After some of the sluggishness we've seen over the course of the last couple of weeks, where are you thinking about things?
I mean, first off, I'm in the middle of the woods up north. So like if you see a bear come up behind me or something like that, don't worry about it. He's just asking daddy for instructions. But my chart decks kind of got blown up a little bit. So I don't have all the levels on there. These ones that are down here are actually really old. So I'll talk through them. But yeah, I mean, we've talked about this for a long time. I've been stubbornly insistent that this was a multi-month range. There was no upside break that was clean. There's been no downside break that was clean. And that remains the case. The November low, as Pax mentioned, is key to me. I've got the yearly level on ES just above there, which basically 6,600 down to like 5,513, which includes the November low. It sort of sits in the middle there. You've got 65.25 on a ETH basis and 65.39 on an RTH basis. I agree with Pax that if that lets go in a meaningful way, it's offered from below, I think you'll see a capitulation washout. And I think that would be very healthy for this market. On the flip side, if we continue to not be able to break that, or we come down and we sweep out the November lows, reclaim it, and start popping levels back to the upside, then it's going to start to look like it was a giant trap. So, I mean, we'll see. It's in the spot now, and you talked about this, right? The indices, they do seem quite a bit more aligned now. Whereas NQ has been like flirting with its November low for, God, I don't know, like all month, right? Like weeks. Whereas ES was not. I mean, ES was still in that 6,800 to 7,000 range. And so now NQ really has gone nowhere in however many weeks, and ES has caught down. So having that alignment, that structural alignment, can really make trading a little bit easier, I tend to think. I do think a very, very large move is coming from here, whether it's a failed break of, November's low and a big rally to go to the moon, or we break November's low and just shit the bed. We will see. I have been leaning bearish for some time. It's very uncommon to me anyways to see a multi-month balance up at all-time high and then have that resolve to the upside. I mean, I can think of like maybe a couple or something, and I don't even recall top of head. So it generally leads to some kind of a corrective move, but we haven't gotten that yet, right? So for ES, since the levels aren't down there, most of them are the same actually from last week. So if you had the 66.40 to 66.47 from last week, that's basically what it's struggling to reclaim. That is going to be a key reclaim all week, not just tonight, but like later on if we do trade lower into some of the deeper levels. So I would definitely have that one on there. And then the biggest one's really, we have an RTH gap sitting between, see if I get this right, Friday's high and Wednesday's low, yeah. I believe. I'm using 41 to 50 as my level, but like that high on Friday was 37.5, and then, I don't know, 49 3/4 or something for Wednesday's low. But like that gap is going to be key. You can see the low volume node on the weekly profile there. So if bulls can't reclaim the upper distribution from last week, then they're going nowhere. Sellers are under no pressure. But if we do get a reclaim and caution a failed reclaim, right? There's a lot of supply up here, many months worth of supply that could decide to liquidate. But broadly, if we're sustaining above that gap, then certainly Thursday and Friday sellers are under some pressure, right? And we could see some further relief. So those are like the two biggest levels that I would look at sort of near us now. Yeah, other than that, you're looking for last week's ETH low on ES. You're looking for the November low, and sure, there's spots in between there. I would just be really careful. Like I want to be careful initiating shorts at what I think is range low, and I have thought is going to be range low for many, many months. So I wouldn't initiate a long up at 7,000 because I thought that was range high, and I'm similarly very careful to initiate a short down here. Holding shorts from higher, simple. And obviously a day trade is a day trade, right? You can be shorting pops on the way down. That's completely fine. I just want to be a little bit careful, keep them on a tight leash. I don't want to get my face ripped off. So that's what I'm watching on ES and NQ. Like, I mean, it really is the same picture. I'm going to try to load it. Ninja was giving me fits earlier. It may not put the profile on there, but that's fine. If it'll load it at all. But NQ, same idea. I'll just start talking through it and we'll see if Ninja wants to load it or not. I would say 313 to 352 is going to be the key reclaim all week. Doesn't look like it wants to load. That's fine. And then I'm using 835 to 874 as sort of the analogy for the ES 6741 to 50 spot. So it's got its own low volume node in that range. And so those are the two biggest key levels to me. And then 543 to 569, I would add that one as well. I think that was on there last week as well, if you grabbed them last week. And so same deal. It's sitting within its yearly level, which I've got as 24,069 to 24,369. And that sits just above the November low, which I've got as like 23,927 quarter, I believe. And so again, I mean, as long as we're holding above there, it's okay. Sellers are very much in control right now. We're coming into a roll week. We do tend to get a lot of swing highs, swing lows around roll. So we'll see. We've got FOMC. I don't know what the hell they're going to do in this situation, right? So going to have a lot of headlines. Right now, sellers are very much in control and bulls have their work cut out for them. But again, it's going to be all about November's low on both these indices. If we get a failed break and reclaim and, start working up back upside levels, especially again, ES 6741 to 50 and NQ 835 to 834 or 874. And if we're back above there after a failed break, it's going to set a low. Not like necessarily the low for the year or anything like that. I mean, it could, but that's your swing low, and it's going to be a meaningful swing low. You'll probably going to want to be careful leaning back in short. So all about November's low this week.
Yeah. I mean, we have it again, it's a heavy catalyst driven week, right? We have the rollover, we have the VIX expiry, we got options expiry Friday, we have a Fed meeting Wednesday afternoon, largely understood to be no action from the Fed. It'll be important to see what they, with no cuts this week expected. How will the Fed react to the stagflationary environment that we are now in with the labor market deteriorating, the negative non-farm payrolls we had earlier this month. Inflation report last week was okay, but that's going to be the low inflation print now for the next 3 to 6 months, depending on how long the war lasts. And so we'll have to hear from the Fed on how they're thinking about the rise in oil prices and how that filters through the economy and what that may or may not mean for their cutting intentions for later this year. The market is largely priced out rate cut expectations until December at this point. So I'll have to see the dot plot, which comes at 2:00, and then Powell's press conference. On the macro calendar, we have NVIDIA speaks tomorrow. Jensen Huang gives his State of the Union speech at 2:00 in the afternoon tomorrow. So obviously, given NVIDIA's importance to the NASDAQ, it'll be interesting to see what he has to say. Typically very bullish, obviously, and unlikely to give numbers, but people will be keen to hear what kind of message he's giving on the state of the world. And then again, the Fed on Wednesday, 20-year auction on Tuesday. So a lot to get to this week for people to wrap their heads around. But really, it seems like it's all about oil, right? And it's all about the Strait of Hormuz. When is it going to be open? How is it going to be open? Is it going to be opened? And the administration is obviously hypersensitive to the rise in oil prices and what it means for gasoline and diesel here in the U.S. And prices at the pump have been exploding higher, even before really any of the impact of these most recent price moves took place. But let's shift over to crude here, because it seems like crude is driving the show, right? I mean, crude's up 2.5% again today, above 100. Last week when we spoke, I think we hit on the show a 118 or 119. Maybe that was during the show, and then
119.48.
Exactly, and then the president basically came out and said the war was over. That was on Sunday night or Monday morning, and oil corrected significantly. And he's continued to reiterate that the war is over, and yet the war is not over. Let's kick it over to Sarah here. But how are you thinking about the crude price chart? And I think you mentioned that you may have some long here, but what are you thinking about it here?
Yeah, I have some longs and some stocks. Yeah, I mean, just still good. We're kind of working our way back up through this big gap up Sunday move. But I mean, I have no reason to believe that we're not going to see new all-time highs this year. So we just keep looking for longs. We are, like I said, though, that big day, that big day, our Sunday day, I think that was the whole weekly range last week. So it would be nice if we stayed an inside week this week and then, went up. So kind of just traded sideways all week. That would be my preferred setup, is to trade sideways all week and then go up next week. But if that doesn't happen, I mean, we're still, what day was that? Thursday. this long, this inside day and up is still working, still good. So no reason to get out of it if you're in a long position. And yeah, so it just keeps going up. So keep looking for setups. You can find lower time frame setups. And then all these levels that are on that daily chart, they're coming from the hourly because we don't have any daily chart or daily targets nearby. So I defaulted to the hourly chart. So these are the next levels for oil. It's like 104 and a half, 105, then 107, then a big jump from 107 to 116. But yeah, kind of working up into here. I think we could probably get to 105 maybe before the end of the show. If not, probably tonight, but we'll see.
Just curious from a trading style perspective. I mean, given the headline risk and given the overnight risk and the Trump tweet risk, I mean, how do you think about positions? Do you have stops in? Do you play smaller overnight and then larger during the day while you could watch it? How do you manage that?
So I manage it with options and just position sizing my options. So no matter what, I can only lose X amount of dollars. I mean, if oil goes to zero, it's not going to hurt me, So through options, I can do that.
Yeah. No, that makes sense. I mean, the key headline over the weekend that's got the oil price moving higher here on the Sunday Open was the U.S. attack on Karg Island, which is the terminal that handles 90% of Iran's exports. And even though the administration has said that energy infrastructure was preserved, they decimated all the military infrastructure. And the response from Iran basically was, well, if you touch our energy, we're going to touch energy infrastructure assets everywhere else in the region. And so a continued ratchet up of the expectations there. There's also been some murmurs and rumblings about what the Houthis might do. I mean, obviously, with the Strait of Hormuz closed, more ships have now been redirected into the Bab el Mandeb Strait, which goes into the Red Sea to pick up oil and then goes back out that strait to go back out to Asia. So a line of ships has moved into that region. Given what the Houthis have done before, if they decide to start blowing up ships or putting up a blockade in that region, expect oil to firmly move past the 119 highs and take out materially more than that, because that would be another 7-8% of global oil capacity that would that would come offline. So we were talking about big numbers offline, and really. Clearly, the administration is trying to talk down the oil price. More headlines right before the open hit that said that the government is working on a coalition with other countries to try to provide safe transport through the region using our Navy and other navies, but not clear that other countries really are looking to play ball yet. France said they wouldn't be providing any military ships, and the UK similarly. So not clear how this is exactly going to go down. And as long as we have the straits largely closed and oil prices moving higher, the inflation that's coming through the rest of the economy and the inability to get materials for downstream, whether it's in fertilizers or petrochemicals or helium, which is a big impact for semiconductor industry, where the supply chain bottlenecks are growing, the growth slowdown that's going to be accompanied that is going to be massive. And this is what the markets are struggling with and wrestling with. And the longer this goes on, the worse it becomes. But Pax, how are you thinking about the oil price here? What are the levels? What are the key focal points?
My God, the all-time high in crude, I think, is $147. If we see $147 a barrel, then this war is going on a lot longer than what President Trump seems to suggest it will. But there's sure as shit not going lower, unless something changes, and then we'll go back to 60 something dollars a barrel. I mean, we saw what we did last week, and that was it last week. Headlines that came out and we just fell apart, and we had last time. It was just, my God, it seems like a month ago. It was only
last Sunday. Yeah,
last Sunday we had the second biggest move in crude history, from the high of 119.48 to the low of 81. The next day, the low of the $79, 79.40, 76.73. It's that is absolutely a huge move.
35%.
Yeah,
in like 2 days down.
Yeah, in a day and a half. Yeah. That was the second. That Sunday night was the second biggest move to make you feel like you're back at home there, Sarah. In a day and a half. back on Dago Hill in St. Louis. You can't say Dago Hill anymore, can you?
You just did. So
We do. We do.
That's the name of a neighborhood. So listen, jokes aside, that was, I looked at that. The only bigger move that we had was the April 24th in 2020, when we went from a high of $12 and something cents to negative 40. I know that was an aberration, but my golly, that was the craziest thing. Anyway, so we're headline risk, like Craig's saying, and I think that the best way, and to answer your question, Craig, about how to manage these, a lot of people, have gotten run over, in those moves, in the high of 119 to Monday's low of 76, 73. So I think Sarah's right. You manage them with options. You know what you're going, what your risk is, and what your upside could be. If you can't define it, stay out. Listen, we're independent traders. We are not here to be heroes. You only need to catch and from an independent trading standpoint, you only need to catch one move from like $61 from 2 or 3 weeks ago, I think it was, on the Sunday show, or 67 up to $77, and then to keep something on for that crazy move last Wednesday. You only need to catch 2 or 3 of those moves in your entire career, and if you stick around long enough, you'll catch them. Right? I mean, you'll everybody will catch a move like that. It just, they come when they come. You can sit and predict. I always see a lot of predictions. Everybody's predicting on Twitter. Predict. And everybody's predicting. I don't try not to predict anything. I'm like farm. I think Cal said it just perfectly. When we're talking about trading what's in front of us, we have to be prepared for either side of the market. From a large standpoint, I think the equities are going lower. But you know what? This is a bullish open so far to the week. Until we take out 6608, I'm looking to buy dips. Until we take out that level, I'll be buying dips. They're protecting the range. Okay, if that's the case, we'll see you back at 6796, my brothers and sisters. But if you're going to sit here and predict and make calls, and you're going to trade your predictions and you make calls, well, go with God.
Yeah. Well, one of the things, just onto this crude chart, I'm thinking about or interested in is, if you remember, we've had these rolling blow-off tops in various asset classes over the course of the last 4 to 5 months, right? In the fall, we saw blow-offs in rare earths and uranium plays and any materials that were going into the value chain of the semiconductor industry. Then in January, we saw a big blow-off top in gold, in silver, and then in gold. And those blow-off tops have not led to new highs being made. They blew off. They've been consolidating, and largely, the rare earth and uranium stuff has kind of corrected lower. Silver seems to be correcting lower. Gold's been correcting sideways. We'll see how that plays out. And now here we are again with oil, with a high volume blow-off into the Monday situation, starting to grind its way back. And clearly the news is constructive, but it will be interesting to see if we could take this, do we take this high out? Is this just another blow off top? But the more I think the most important part of this is the energy inflation impact on the economy and on the consumer is a big problem, right? And clearly not even just for the U.S. consumer, but for Japan, for Europe, and for other importing regions. They're in a big mess here, and that's part of the reason why the bond market has been so soft, is that foreigners are selling treasuries in order to raise dollars to buy more expensive energy. And so that's been one dynamic here, which hasn't really played out. If you would have told me we were going to war, you would have normally seen a flight to safety into treasuries. It's been the exact opposite of that, because not just the inflationary component, it's the selling of bonds to raise cash to buy more expensive energy. So that dynamic is in play here. Crude is driving everything. And the administration knows it, and everyone's trying to figure it out, but Iran knows it too. And they're doing what they can with their heavily depleted arms, right? According to the administration, their military has been completely destroyed. Their Navy is completely destroyed. And yet we still see missiles flying. We still see ships getting blown up, and they know they don't have to blow up every ship. They just have to blow up, one a day or one every other day to keep the insurance market closed for moving ships and to keep tankers out of the region. And so we'll see. Farm many big levels here on crude. I know your charts aren't cooperating per se, but anything you're looking at?
Yeah, I can speak to them. I mean, it's in good shape here. holding above 98.80s or so and building volume. It's a good start for a retest of those highs. I don't think it's really in any. I would still mark. I mentioned 91.69 last week. You could call it 91.69 to 93, basically. As long as it's above there, it's completely fine. And then I don't think you really see any downside pressure until below 89.60 to 89.69, roughly. That sort of gets it back into the meat of the reaccumulation from last week. And if that happens, then maybe we do see some downside pressure towards 82.69 ish, also key. So, looks good for now, but I mean, yeah, it's so much headline risk there, right? And I, you make a good point. I'd be curious to see if crude just can't make it back up there again, especially if headlines continue to come in that would suggest that perhaps it should. Then maybe that's signaling something a little bit more longer term, whether it's going to be demand destructive and be problematic from that perspective. So that's what I'm watching. 98.80s, roughly 91.69, 89.69, the three big levels. Other than that, there's just sort of trash structure up above. I think Sarah mentioned 105 ish. That's about right. And then I've got like 110. I mean, almost perfectly cleanup structure from last week. If we do start running back to the upside, and again, no real trouble until below about 89.69 bare minimum. So still consolidating for higher, at least for now. The longer they hang up here, the more pressure we probably see for equities. But definitely watch for equities to shrug that off. I mean, again, if we get some big technical trap set up where, ES and NQ come down, sweep out November's low and reclaim, I bet you see pressure come into crude that doesn't make sense. Just sometimes those things happen. It's all one trade. Sometimes things will flip. Maybe it'll be equities that lead that flip. Maybe it'll be crude that leads that flip. But we all have the 5-minute chart of crude up if we're trading ES and NQ intraday. That's for damn sure.
Yeah. 40 minutes into the Sunday Open, and we're still seeing crude up about 2%, 98.90 last. The VIX is starting to slide a little bit, was above 27, now 26.65. That's helped lift equities off their worst levels. The indices trading down 10 to 15 basis points. The bond market kind of flat, the dollar kind of flat. Crypto is doing better. Ethereum up 3.4% and Bitcoin up 1.8%. And as we mentioned earlier, special programming note, we have the Crypto Closeout premiere episode with Trader Mayne and Ponzi Traders starting at 7 o'clock. So make sure to stay tuned and listen to that. But wanted to just shift gears here to gold and silver. Gold hasn't really traded how I would have thought it would have traded at the onset of the war. We're 3 weeks in to the war here, and gold's been just languishing and struggling a bit. Thought it would have done better. Clearly, it's been on the wrong side of the dollar strength. The DXY has moved pretty nicely over the course of the last 3 weeks here, so that's been some headwind for gold. But gold's, flirting with 5,000 again here on the April contract. Sarah, what's the thought here on gold?
So a couple of weeks ago, we were talking about the pink line, which is the line in the sand to be long. If we're above it, you can be long. If we're not, you can't be long. So what's happening on the higher time frames is gold is trying to go outside month. So let me delete that so you can see. So we failed to stay above last month's highs, and we're coming back through. So we're probably not going to go outside month this month because there's only 2 trading weeks left in the month, and that's a lot of month to get all the way down here. But we do have a nice pivot low target at 48.54, and gold and silver both have the same setup, simultaneous setup, which is, I think, hold on, wait, let me make sure. Yes. So they both have a 3-1-2 down setup, meaning inside weeks and down. Silver technically hasn't triggered it yet. It stopped exactly at last week's lows. But so if we're below last week's lows, you want to be short gold and silver in the like short term. I mean, if you're long from way lower, you're probably fine right here. But if you're, day trading this from week to week or day to day, it's bearish right now if we're below last week's lows. And like I said, this level here, I really like this one for a target. Since we failed to stay above those highs, so we would look to come and take out these guys. We would, look to take their stops out, the bulls. But again, you got to be below 50.14 to be short on gold. And for silver, that level is 79.52, the orange lines on the chart here. And then they did complete their internal broadening formation. I don't think I mentioned this on the show. No, this was on I do a public show on Wednesday nights, but we talked about this broadening formation in here because so we call this a mother bar. This candle, all these candles are stuck inside this one. So what happens in that situation is you get new price discovery in the form of broadening formations. And, we had a low, we made a new high, and then we got a reversal on Wednesday. And then we came all the way back down and took out those lows. And gold did the same thing, had your internal broadening formation, made a new high, you had an inside day, and it reversed and came and took out that low there. So again, still like pretty bearish right now, long as we're below last week's lows.
Yeah. I mean, broadly speaking, from macro perspective, we talked, end of last year and early part of this year, how silver had been outperforming gold, and the silver to gold ratio had been really moving higher. I think that was indicative of, a stronger economic backdrop scenario. More recently, gold outperforming silver, I think makes a lot of sense in light of the heightened geopolitical risk and uncertainty out there for forward demand. It's not surprising that the gold chart looks a little bit better and the silver chart looks a bit worse, and that kind of conceptually makes sense to me. But
yeah.
But Pax, Howard, do you have any key levels here we should be watching out for on gold and silver?
Yeah, gold's. I haven't paid any attention to silver, but gold's. There was a big failure last week. So remember the level. It's same stuff. I've talked about these same levels. Now the dividing line is 50 quarter, $5,025. That's that's the dividing line. You're long above that, short below it. You're long above 50 quarter to 51.15 or 51.10. You're long above that to 52 even. Okay, when we failed through 52 even, that's a short. If you're trading, aggressively, and you're going to take profit 51.10. And then underneath 51.10, or you can be short there, you add more down to 50 quarter, and we get underneath 50 quarter, you got to go home short with them. Underneath 50 quarter, the next level the next, as long as we're below 50.25, the next level that we're going to trade to is 49.35, so 49.40, and then another $90 underneath there to 48.45. So if we are under 50 quarter, then we target 48.45. That's the trade. We should, one quick thing to backtrack a little bit back into the indices is, the indices will roll midday. So please, tomorrow or after the open. So please be very mindful of all the levels that we are talking about today, at least the levels. I've had this question a couple times in the chat. My levels don't change. 67 quarter is still going to be the open. The quarterly pivot. But we all have to be mindful of the fact that June is trading at a 50-point premium to March, okay? 50 points. So right now, June is trading at 68.89. I think we're talking about the March contract, but it bears mentioning. It's worth mentioning, and maybe bears repeating if this was mentioned earlier, that when during rollover, the difficult thing to know is when to roll. Now, also, a lot of you guys are going to adjust those levels. Listen, the November lows that Farm is talking about, that shit doesn't change. 65 quarter is the low for November, and it's going to stay that way. Back adjusted, non-back adjusted. I don't know how you do that. I don't use those charts. But the point though is now in where the lows that Sarah was mentioning for the month, 65.84. That's not going to change, right? I mean, it doesn't become something other than that. Those are the lows. So you have to, when the volume rolls tomorrow, midday after the open, then we roll to June, and those lows still stay the same. I hope I'm explaining this well, okay? You're just rolling now to a 50-point premium. Be mindful of that gap. I call it the rollover gap. That 50-point gap between right now, June is trading at 66.93.5. Yes, the March is trading at 66.43.5. All right, 43.93. 50-point premium, that gap is going to be important. If we leave the gap and we don't fill it and we run, well, we'll see 67.96 and all the other levels, 67.27, 67.96, back up to 68.65, 69.02. If we do fill the gap and we hold, then back up. If we don't fill the gap, then we'll see the monthly lows of 65.84, and we'll see the last quarter's lows of 65 quarter. So anyway, back to gold. That's the trade gold, 60 quarter above it, 60 quarter long above it, short below it. That's your dividing line. I suspect that we're going to churn 50.25 until gold decides what direction it wants to move, either back up to 51.10 or down to 49.35. I'm sure
we're there right now.
We
50
are.
and a quarter.
Yeah, and there's low. Remember, we talked about that level for a month ago. That it's not going to change. It's going to be the same. And right to what we were talking about earlier, Sarah, it gives us trade definition. I'm not going to chop myself up around it. I'm short from higher, and I'm going to see if we're going to trade below it and target down to 49.40. If not, well, hey, I've taken profit on Friday down here, and I'll be happy to scratch out the rest.
Yeah.
So
well, it'll be interesting to see which asset class, if any, kind of moves away from this cross asset high correlation that we've seen, right? We've been seeing oil up, VIX up, dollar up, bonds down, stocks down, gold down.
Right.
At some point, we're going to, start to see one of those asset classes, move in a weird direction. I think that'll be very indicative. I mean, we'll talk about this again later and at 7:00. But Bitcoin has been showing some resilience for sure. Not expected. It's basically probably been the best performing asset since the war started, which is quite ironic. But Farm, any key levels on gold you're checking here? Because I am interested to see if gold will start to kind of act more like it quote unquote should amidst all the heightened geopolitical uncertainty.
It's all about the dollar, though. You want to watch what gold is doing. Keep an eye on the dollar. Dollar catches a bid, gold will get sold off, and when that changes, it's going to change hard.
Yep.
That's interesting, Craig, what you said about the selling of bonds to favor higher oil prices. Well, I mean, there had been a lot of movement in reserves to gold, right? I mean, maybe that's some of the pressure, I suppose.
Yep.
I'd watch 49.90 on top of just what everybody else said. I would just watch like 49.90s would be like, maybe that's a spot where we get a punch down through last week's low that then reclaims. But I will say last week's high is at a pretty bearish location to me. So I would definitely want to see a strong, I want to see that taken, especially on a cash hours basis, last week's low. Taken out on a cash hours basis and then reclaim maybe something like 50.88 maybe. I think that would be a start of something potentially. But otherwise, if this starts building volume below last week's low, I think Pax mentioned somewhere around 49.40s, something in there. I've got 49.49, 49.47. Maybe with, potential that it pukes out quite a ways. So I think we're definitely watching the dollar. And I think you make a good point, Craig, about what if gold turns it around first? What if dollar continues to rally and gold all of a sudden shakes it off and is able to move? I think that would be a good look. So you look for these subtle signs of relative strength where there should be none. And maybe you take your shot then. But definitely a bearish location for last week's high. And it's under some pressure here. We'll see if it can get a sustained break below last week's low, or if it's just a quick sweep that reclaims and starts working back up last week's range. If we do, I would look right around the 51.50 area. You've got a clean double distribution weekly profile with a giant low volume, I'll call it a low volume maw. It's pretty huge between the two distributions, so that area could potentially be reactive. Again, call it 51.50-ish. Would be an area to watch out for that could potentially stuff it back down into the 50.80 and down to the 50.25 range.
Yeah. Well, we are 53 minutes in, and look, that's not surprisingly, we're starting to see crude come off a little bit. Now only up 1.5%, 98.30, as the VIX has fallen, is now down 90 basis points to 26.35. Equities have levitated and now are up, trading up, 20, 25 basis points. Gold and silver still a little bit weaker. The dollar mixed. I wanted to just briefly, Pax, I think before you had mentioned, or maybe it was before the show, you mentioned being negative on bonds. Any key levels there on UBs to keep in mind here?
Yeah, the dividing line in the bonds is 115.02. 115 spot 02. That always makes me feel smart when I say that. So 115 spot 02. And then I tweeted the trade to pay for it at 114.24 and then take profit on it 113.26-ish. If we trade below 113.26, then we'll trade down to 111.11 and then down to last year's lows, which I think is 110.01. Something like that. 110. Oh my God, hold on, I gotta look. We'd have to trade
Yeah.
down level.
110.01.
Okay. Phew. I am getting older, and you know, and my
You amaze me with your memory and numbers.
And we've already rolled in the bonds, right? So
yes, yeah. Oh yeah, we're June.
Yeah, we're June for the bonds. Yep.
I just, Sarah, it's just the stuff that I can, you know, and that I remember things like that. It could be a blessing, and sometimes it could be a curse, because I'll wake up thinking about some terrible trade I made in 2012. But yeah, no, June is already bonds already rolled to June. They expire also Friday, so we'll get all new quarterly pivots and levels and things there too.
Yep.
Yeah, interesting to me that ZB is in, what do you know, a range since September, as equities are effectively in a range since September. And so similarly, I would watch for a sweep of the September low on ZB. There's actually, I might look for this, honestly. There's some demand sitting just below there on a weekly basis that could sweep out that September low and then reclaim and find some strength. So I'm actually going to chart this a little bit more closely, but it's just a big ass box. I mean, basically 119 down to 113, and so I'd be watching those lows from September, and just to see if they sweep that out and put in a good low there, I might start looking at that with some interest.
Yeah, we're below last quarter's lows right now, but we are stuck in a box, like you say, because if you go to like the 6-month chart, we are double inside on the 6 months, so that's just sideways. So we need a break of that. What is that? 111.11.
Well, if you really want to zoom out, go back to 2006 and 7. We're trading in the very same range that we were then too,
Yes.
and I think then that brings up, like, like if we look at where September was in the S&P, I mean, in bonds, where was the S&P? What's the relationship between SPOs and bonds? We look at where, at these prices when we're more, you remember when we used to call, Craig, we used to call that more normalized rates?
Yep.
And now they're not so normal. And I don't know, where was the S&P and the NASDAQ then? So it's an interesting board. I think we said this last week. It's an interesting setup. It is a very, very interesting board. It's I mean, whatever's going to happen this week in the war, God forbid, please God, peace. But whatever happens in the war is what's going to move the markets. And, and are we stuck in the range? I mean, we said it right off the open. It's a bullish open to the week. This is bullish until we take out 6608 in the the March, or what was the open in the June? 50 handles lower, whatever that is, 56, 66, 56 in the June, it's bullish.
Yeah. Well, we're coming up on the top of the hour here. Real quick, we have to look at Bitcoin. We have the crypto closeout premiere episode coming up in a few minutes with Trader Mayne and Ponzi Trader. But Sarah, what is the Bitcoin chart showing you right here?
So we get a new weekly candle in 1 hour. We are still 1, 2, 3, 4, 5 weeks sideways. However, this is kind of a stronger looking close for the weekly candle. So if we can go inside and up, we can potentially trigger the monthly reversal up here at 79,339. So you're going to want to pay attention to the inside week break. And then we'll see what we do if and when we get up to 79. I'll call it 79,340. NQ just made a new high. But yeah, so target would be like here to here. That would be your like immediate trigger target. So a break above last week's high, which would be 74, we'll call it 70. So above 74, it's trying for 79. And I want to go look at Bitcoin or NQ real fast. Boom. All right. So we're about to plow through all these highs. So potential for outside days on futures, meaning taking out Friday's highs, because we're failing. This is what you call a fail breakdown. And Farm and I kind of talk the same language. He's not so much strat, but it's the same stuff. Failure to stay below Friday's lows and reclaiming the range. We would look to go outside day if they can get to it. And that's for all of them. ES, NQ, RTY, YM. So everything's trying to, gravitate towards Friday's highs right now. And yeah, that's all I got. And I'm excited to watch the new guys, the crypto guys.
All right.
And on the butt coin real quick, it is coming up and kissing April's low a couple of times. I think Sarah would agree that's probably an important reclaim from a price action perspective as well.
Low.
So prior yearly low, yeah.
Yep. Last year's lows is 24,420.69.
That's right.
All right. Well, all right, guys. This has been it's been great. Always fun catching up with the team in the Sunday Open, and I will see you guys all next weekend. But right now, it's time for that premiere episode of the Crypto Closeout with Trader Mayne and Ponzi Trader. Let's bring him in.
Hello.
Good morning, good afternoon. Dylan, how are we?
We're good. Welcome to the Crypto Closeout. This is the first episode of a new Sunday show brought to you by NinjaTrader Live and Kraken. I'm Trader Mayne. This is my good friend and co-host, Ponzi Trader. How are we doing today?
Can't complain, dude. We just had a pretty sick move in BTC for the last hour since the open, huh?
It's interesting, I feel like Bitcoin's been in this sideways range. Like the last show they were talking about several weeks already here, and you kind of get that feeling like, is it finally time for a bit of a counter trend rally?
Look, I'm bearish on a higher time frame, but right now I think we're going to trade up towards 80s. It's really starting to press. Obviously, we're at Sunday, low liquidity. Not much participation, and it's easy to move price around into the small range, but I'm ultimately pretty bullish on this lower time frame. It's starting to look really, really good.
I agree with you. We'll get into the charts shortly, but there's just so many macro kind of just global driven events right now that seem to be causing a lot of price movements, and Bitcoin surprisingly has been resilient. I would say we have what's going on, in the Middle East, what's happening with war prices. We have the equities markets had a pretty big tumble last week, and Bitcoin showing a glimmer of hope, maybe doing what it's finally supposed to do, which is kind of be that flight to safety, safe haven asset that performs well during times of uncertainty.
Dude, we've been waiting for that headline, right, for years, and gold kind of ran away from us and started to kill that thesis, but there's still a chance. There's still time to make that a reality.
Yeah, it kind of went from like we're just lagging gold and equities on that last up leg to, okay, we completely missed it out, and maybe we were leading to the downside. But I'm with you. I'm cautiously optimistic going into this week. I think we're going to have another week of headlines, geopolitical events, but the chart set up in a vacuum. I agree. We're tapping at the range high here. I think a pop higher, especially with how the futures market opened, is very interesting. And I think what you'll see in the charts here once we pull those up, and something for maybe some of you CME traders, future traders who are watching the show, maybe you're new to crypto, one of the biggest advantages of this asset class is this thing was open all weekend. You don't have to wait until Sunday, futures open, to get the jump on what's going on. Crypto trades 24/7, 365. So if you're looking for a market that never closes, something where you can get ahead of the curve on stuff that happens over the weekend while futures aren't still open, crypto is the place to look. Kraken is going to be the place to do it. NinjaTrader as well, trading those CME futures. The stuff we're showing you here are the Kraken native charts, but these are no different than what you would see on MBT, CME futures. The concepts all apply the same. If your strategy works over there, I'm confident will work here as well. Why don't we get into some charts? Let's see what you're looking at here. I'll give you my quick top-down thesis here, and then I'd love to hear from you. I think a lot of people have the most kind of common question for crypto, especially if they're not crypto native, is where's the bottom? When's the bottom going to be in? I think you and I are in the same camp here, where I don't believe the bottom for Bitcoin is in yet. I still think that we probably have another leg lower coming. My expectation is somewhere in the $38,000 to $58,000 region. It looks like I'm just pulling a fib here, but this is conveniently how pretty much every crypto market has bottomed, right in that kind of really deep fib retracement area. So last bottom was right in between the 618 and the 78.6. I'm expecting the same thing this go around. Timing wise, because of the 4-year cycle, I think late 2027 is when I'm looking for, or late 2026, excuse me, is when I'm looking for that bottom to form. But looking at this on the slightly lower time frames, right? We had 5 red monthlies in a row coming into March. That's very rare for Bitcoin, very rare for crypto. So the fact that we're seeing a green month of March halfway through basically now, I think it bodes well. And I do think that we could see this kind of rally continue a little bit longer. Well, I think ultimately my draw on price is lower. I totally see an opportunity for us to move up, like you said, high 70s, low 80s potentially this week. What about you?
Yeah, that's exactly what I'm looking at, honestly. So the one thing that I've noticed specifically, this area that we're starting to bounce from is huge, or at least, this area that we're starting to revisit. If you look back all the way to, this was March of 2024, this was a pivotal area. We visited this high of 72,000. Came back, retested it, rejected it, and then it was an aggressive explosion to all-time highs. So we saw 96,000 very rapidly. We fell down from 96, or the high of 108, revisited that, perfect support. We had incredible demand there, and now we are underside of it. So what do we expect to see? First, obviously, we broke down gross, but I think we might get a solid move up into what you were just saying. Really, like I like this area to test of the 80s, right? And that makes for a pretty solid, move right now. If you're long from 73,000, you get a nice $7,000 move from here. That being said, ultimately, I agree with you wholeheartedly. I think we're probably going to see 50,000. It may take a headline, but there's a lot of fresh liquidity down there that's just been harboring for a very long time. So in my opinion, it's just another, lower high before something like that. And then this is gold mine area to get some cheaper Bitcoin. And whether that takes 6 months, 2 months, whatever it is, it's probably going to be headline driven. I'm long for now, and I'm gonna stick to my guns. Hang out in this long that I've got. Probably invalidate. I don't know. I think there's a fresh, easy invalidation just around the 68 region if you're long from like right up here. Like gives you a good risk reward to set up for an $80,000 move.
Yeah, I think you just really don't want us to fall back into this range that we're kind of, breaking through right now and it just be another disappointing deviation. One thing that's really funny about Bitcoin is when we're in a bear market, a downtrend like we are right now, price actually spends more time going up than it does going down. And it's the inverse in the bull market. So when we're in a bull market, we have these very long sideways periods of consolidation followed by short explosive moves to the upside. And when we're in a bear market, it's the complete inverse. We have these kind of long sideways counter trend rallies, then followed by quick decisive moves to the downside. So I think we're on the same page here, cautiously optimistic going into this week. I think a lot of it, depends on what we're going to see from futures as well. Does this bounce in US equities actually have any legs to it? I'm short from higher, and I think my expectation on equities is probably a bounce and then lower as well. I don't think this move down is done yet. But for now, I mean, things are looking good. And so I think the long setup here, if you're not in one already, is probably some sort of range high reclaim.
Yeah.
Right.
Yeah, I completely agree.
You long probably put your stop below the swing low before that breakout. But hey, I mean, I'm okay with it. I'm okay with a little bit of green because it's St. Patrick's Day on Tuesday. So it'd be pretty poetic if we had a green week for St. Patty's Day on Bitcoin. I feel like it's much needed before inevitably, I think we probably get slammed for that next leg down.
That being said, I don't know if you've been paying attention, but we've had a Coinbase premium for the last 2 hours. That's the Michael Saylor signature special Sunday evening.
Why don't you explain that to maybe some of the audience here that's not crypto centric? When we say we have a spot premium, what are you saying?
Yeah, so that means it's a real sticky buyer. Okay. So a futures buyer tends to be in and out of positions pretty aggressively, pretty quick. And you don't really expect them to hold on to positions like a spot buyer because of execution. And traditionally, as of recently, Coinbase has had, or at least as of last year, has been carrying the premium. So if you just take up like a trading view chart, you can put up two pairs, right? And this is the easiest way to see the premium between two different exchanges.
I've got it up right now, I think.
Right
Yeah.
here, yeah. If you just if you just put them both in your list, and you just look at the prices between, either, and you can kind of watch them. And obviously it's not a consistent premium, but you can see like a $20 to $50 premium. That's the simplest way, obviously, to do it. But there are other tools that allow you to actually track premiums. So that tends us to believe that, there's a spot buyer on a Sunday, and Michael Saylor's footprint for the last 7 weeks or even longer, maybe 20 weeks, has been bid on a Sunday, tweet on a Monday, mark the Monday high, and then the week continues. But that's kind of what we're seeing right now. So I wouldn't be surprised for a Michael Saylor tweet tomorrow morning mentioning how much Bitcoin he's bought over the night, over the weekend.
He just seemingly has infinite money to buy Bitcoin. It's quite hilarious, and he seemingly is never going to sell as well. Speaking of people with infinite money, I'm sure you read Arthur's latest masterpiece, his latest newsletter, blog post, Substack, whatever you want to call it. Arthur Hayes, former CEO of BitMEX. Now he runs Maelstrom Capital. He's their CIO. So he's a very good writer, and he'll put out these very well-written, long pieces, basically his thesis for coins. And his newest one was quite audacious, calling for hype to 150 this year. So just so everyone knows, hype's all-time high, right, was like $60. And Bitcoin was trading well over 100K. He's now calling for hype to go basically 3x its all-time high level. What are your thoughts on this?
Look, I think that's a really good trade. Okay, here's the beauty of it. Talking about headlines, I don't know if anybody has seen this yet, but the Wall Street Journal mentioned Hyperliquid. Hyperliquid is a decentralized perpetuals exchange that kind of made noise over the last 7 days, specifically because the ability to trade a lot of assets 24/7 through perpetuals. If you don't know what a perpetual is, it's what Arthur Hayes created. It's a futures contract that never expires, hence the name perpetuals. That being said, now that has created an entire new, market, new inefficiencies for people to trade. Specifically, oil was traded last weekend, $1.4 billion in volume over a weekend, which is impressive. Nonetheless, lots of arbitrage opportunities were presented there because of this, discount or premium from Hyperliquid to other venues where people were traditionally trading oil. All of this was done on Hyperliquid, and Hype is currently seeing the benefits of that. We had a pretty explosive move from $30 up to 37 in the last 5 days. Something like that. Yeah. And on a valuation perspective, I think Hype is valued at $9.6 billion. So at an annualized revenue,
where are the PE boys at?
Yeah, go ahead. Spit some facts. Tell me, Trader Man.
So
talk to me about PE.
My first thoughts on the article is in typical Arthur fashion, it's always fill before you shill. So in the very last line of the article, he effectively says, I bought all my hype at $25 and it's trading at 35 by the time the article's posted. But this is Crypto 101. Everybody's talking their book. No one is giving you a free lunch and they're going to tell you to buy the coin before they have a position in it themselves. That's totally kosher. My only issue, I think, with the prediction, I think I have a couple of them. Number one is, I think Arthur's conviction on these predictions. He has strong opinions, but he holds them loosely. So if something changes, something happens, he'll dump that entire bag then not even mention it. And you're like, wait, yesterday you told me it was going to 150. It went to 40 and you sold everything. What the heck? So don't be surprised there. I just think the 150 this year is a pretty bold claim when I think there's very high chance we're going to see new lows in Bitcoin. Sure. I think the equity down move still hasn't come to fruition. I think overall, I agree with everything you said. What Hyperliquid was doing for for DEXs, what we have going on at NATO, for example. This is the future of trading and speculating. It's going to be happening on chain. So I like the thesis, certain parts of it. I think were very strong narratively, but always a little hesitant with the Arthur shills because they don't always have the best hit rate. I think he was telling us Bitcoin was going to 1 million when we were near the top, but that article's been obviously dead and buried now. So I'm bullish on hype as well long term. I think the biggest risk to DEXs is a regulatory risk. New administration comes in, they say, hey, screw Trump and everything that he did for crypto. They go the opposite way with the pendulum and they say there's no such thing as a DEX anymore. Everywhere it's got to be KYC. I think that's what's going to stop things like Hype, NATO, Lighter, etc. from really succeeding. But otherwise, I think it's an interesting idea. I think you're chasing a little bit if you're just trying to buy on the back of his article. You still got to remain disciplined. Find a setup that you can get into. If it's going to 150, I don't think you need to worry about buying at 35 or 40. You can wait for the right setup.
And stay off the leverage, of course, especially if you're trying to swing for the fences here.
Absolutely. So speaking of St. Paddy's Day, as our first guest on the crypto closeout, we have an Irishman. So I've met him in person, a lot taller than a leprechaun, but that's okay. Follis, welcome to the show, man. Good to see you. Thanks for coming on.
What an introduction. I'm taking shots already.
Absolutely.
Catching strays for being Irish. I never thought I'd see the day.
I don't think it's a bad thing, right?
Someone said the other day on my stream, Follis, when I think of Ireland, I think of you and the leprechaun from the Lucky Charms box. So I don't know, maybe that's a cultural thing. I don't know, should I feel offended about that or not? But yeah, I feel honored to be
McGregor in
I feel honored to be in such esteemed company. Yeah.
Amazing.
I'll be celebrating you this Tuesday, brother.
I think a lot of people will by just getting blackout drunk. That's the traditional way of doing it. Yeah.
You guys do anything else over there?
No, you're really asking. Yeah, you're asking the wrong crowd. No, man, it's like just very different variations on the theme.
So I want to ask because Ponzi and I kind of quickly gave our thoughts high time frame. Where are you viewing the market cycle right now? Are you thinking the bottom's in? Is it close? Do you have areas where you're interested in potentially deploying spot, or are you kind of just sitting on the sidelines right now? A lot of uncertainty out there. You don't know.
Yeah, for sure. And it was fascinating listening to you guys talk just before I came on, because it seems that we're all kind of looking at broadly similar things, maybe with slightly different approaches. So the first thing I will say is I love your high time frame outlooks. I think that the bottom is not in. I actually have I prepared a little something that we can maybe look at in a second to kind of lend conviction to that idea as to why that is the case. Yeah, I see you pulled up my chart there. So on the low time frame, I'm also going to take a slightly contrarian take to you guys. On the kind of low to medium time frame, I actually not as bullish as you guys. I don't really see us putting in that big a move. If anything, I think this move is going to lose momentum either like today, by which I mean, Monday, or somewhere higher later in the week. I think that this is still a range until proven otherwise. I've had pretty good success trading. If I can find like this chart here, like I've had pretty good success trading since October, when we put in that 126K high, when a lot of my I would say a lot of my colleagues have not had the same success or have maybe struggled a little bit. And I think part of that is to do with just the fact that BTC has been in a high time frame downtrend, and in between those kind of trending moves to the downside, it's just been ranging. And range bound PA, while it's often criticized as being choppy or hard to trade or impossible, it's just chop city. A lot of the time, it's actually pretty rules based. It can give you very clear invalidations, very clear rules based trading, and that's the kind of stuff that I really like and the stuff that I really enjoy. So for that reason, I've kind of had a good time trading BTC here. And yeah, my system basically says when BTC is in this sideways environment that and it's funny, Mayne, that I'm on the stream with you because this is a lesson that I remember hearing you teach me back in 2021 whenever I started trading,
Oh God, I'm old.
At range. Yeah, exactly. Yeah. At range high, you're looking for reasons to get bearish. At range low, you look for reasons to get bullish, right? And that's something that you said, you've been saying for years, and it's something that has informed a lot of my trading ever since. And as I said, I've done quite well the last few months. And part of the reason of that I've had that success is I'm sticking rigorously to my rules here. So while it can be very easy to get caught up, we've had this upside move. And it's funny, literally a week ago, we had this move down on futures open from whatever it was, 68K down to like 65 point something, 65.6, 65.7. And that was followed by a bullish week, so it's interesting that now futures is open and we're getting an upside move. I don't know. I don't believe it at all, to be
It's
honest.
a scam. It is. Sundays have been notoriously
Yeah.
scam, so I don't blame you for
So
thinking.
I agree with you. I think the best case upside here is into the 80s. It could, I mean, who knows? This bounce could go higher, but I agree. It's got to convincingly break out of the range, right? And until it has done that, we assume it can be a fade. I think what we have sentiment wise as well is if you go back to that prior chart you had where you showed the prior consolidation as well, a lot of what we're seeing on Twitter is very similar. When we had that, where you have that red arrow right before the big breakdown there from 98K down, Twitter was the same as it is now. You can't fade the multi-month range breakout. We've been in this consolidation for 2 months. We're breaking out. You can't fade it. Turns out fading it was the best trade on the chart. I think my cautious optimism stems from two things, really. One, 5 months in a row of down. I'm like, we're due for some sort of bounce, but maybe you're right. Maybe this is it. March could still end up closing green. And it's just kind of another repeat of that prior fractal that you've mapped out there. I think the easiest trade, like I said, on the long side is a confirmed range break. If we have any sort of deviation where it gets above that range and back below, kind of like what you've drawn out there, that's actually your short trigger. And then you just put your stop at the high and you ride this thing into the depths.
Yeah, 100%. I think that the market conditions are still such that they're rewarding you for being, as Ponzi just mentioned there, just treating every move like a scam. I think that's something that a lot of the really really talented traders I know, a lot of these guys are high time frame swing traders, and they have just not been able to get anything going recently because of how volatile the price action has been, how kind of up and down the price action has been. I think I've had so many like Twitter posts in the last like month that are basically just like I just take like a segment of price action and just goof on how choppy it is, right? And it's like everyone's feeling the same way, so they're all liking it because it has been like there's been a lot of volatility, a lot of quote unquote choppy price action. We saw the exact same thing, as we alluded to. There was a very similar range between the end of November and the start of January, which just was consistently giving these, these fake outs, these moves to range high, followed by just a complete reversion, chilling at range lows, for a while, and then rotation back to the highs. So it's been tough. And I think especially if you have been looking for the breakout, right? If you've been playing for the eventual, like the volume injection, the breakout, the extending move, right? The expanding move. If you've been playing that, you've been getting hurt, because we have gotten a few of those. I mean, we just had, it's easy to forget about it, but I mean, we just had some pretty expansive PA like at the end of last year, right? But I think that if you've been trying to catch the bottom, like quote unquote the bottom, basically since October, you've just been getting hammered. And I think that it's one of those things where this market is punishing guys mercilessly for not adapting, for failing to change their styles when presented with this new paradigm that we find ourselves in.
Bear Grylls said it best. You have to improvise, adapt, and always drink your own urine when there's no water left.
Is that what you've been doing?
Yes. But no, I completely agree. I think it's a fool's errand trying to catch the bottom, same as trying to sell the top. The goal is always catch the meat of the mood, trade with that higher time frame trend. And something people forget about Bitcoin and crypto is the bottom's never one candle. It's always some sort of range, right? When you're thinking of something like Bitcoin, where there's a finite amount and there are large entities who are accumulating Bitcoin, selling it at a higher price, for the bottom to form, there needs to be a period of accumulation where those long orders, that spot Bitcoin is purchased, that they can then distribute at higher prices. So completely agree. It looks like you got some stat. He came prepared. So
your boy's been in the lab. Your boy's been in the lab. Yeah, I've been cooking up some stuff.
All future guests, take notes here. We have a very high bar being set by our first guest here. So please.
I wish I could say this is all fresh material. This is much of this is copy pasted from my Discord, which where I gave the same idea. So effectively, like, this is something that I've been looking at for a while now. you guys kind of started this discussion by asking the question, is the bottom in for Bitcoin? And I'm glad to hear that both of you are saying no, because that kind of aligns with my view here. I don't think the bottom is in, but when you kind of pull on that thread, and a lot of guys are saying the same thing on Twitter, right? A lot of guys are saying the same thing on Discord. When you ask them why, they say like, oh, because X said it, or oh, because I got a tingle, I got a ball tingle, and they don't actually have a reasoning why. So I want to come a little bit more prepared. I want to talk to you guys about why I think the bottom isn't in. And this looks like a lot of text. I'm going to go through it very, very quickly. The first reason, and this is all just looking at previous cycles, right? And when the bottom is formed. And very, very quickly, it's based on effectively three different, let's say, elements of confluence, right? The first one is drawdown from all-time high, okay? And this is very nice because in all previous cycles, we've had these drawdowns from all-time high that are decreasing, right? You see 93%, 85%, 84%, 78%. This cycle so far, we've had 52% from the high. And a lot of guys are saying, oh, that's enough, right? Like that's enough of a bear market. But actually, I think that if you follow that trend, and the first thing I should say here is that like, these are all such dubious extrapolations, right? Because the samples that like the sample size we're dealing with here is tiny.
Very small.
We're looking at like 3, maybe 4 past cycles, and like the market is completely different now. So let me first of all, let me get my disclaimer out of the way before the guys come crucifying me in the chat. I understand this is dubious speculation, but at the end of the day, if you don't have dubious speculation, are you really a crypto KOL?
Yeah, what are you doing in crypto?
Speculate, yeah. Right? So I'm thinking more like, if you follow that trend down, I think in something more like 70%, minus 65%, something that will bring us down into the low 40s, or as you said, Mayne, maybe the high 30s, right? Look at time from all-time high, right? 2011, we were 22 weeks. Now, that's probably the only one that's in keeping with where we are now, which is 22 weeks from the high. But the last 3 before this cycle, we had 59 weeks, we had 52 weeks, we had 54 weeks. All of these coming in or around a year, kind of since 2013, right? So I'm thinking like, yeah, 22 weeks would be the shortest, the joint shortest with 2011, but I'm feeling it's probably going to be more similar to 2013, 2017, 2021, probably closer to that 50 mark, which would bring us to the end of the year. As you were alluding to, Mayne, you said maybe Q3, Q4 bottom. That's absolutely what I'm thinking as well. 50 weeks would bring us kind of to that end of the summer period where we often see like an injection of volatility. A lot of guys are getting back to their desks after spending the summer, yachting around the Mediterranean or whatever it is, holidaying in Europe. And a lot of these guys bring a lot of volume. In September and October, we see a pickup, and we see potentially, if there's been a consolidation move over the summer, chop over the summer, we see an expansion into Q3. And we actually saw that just last cycle. I don't know, do you guys remember that choppy summer we had in 2022, followed by the expansion towards the end of the year, right? Now, the last one I want to touch on, and this is the interesting one, right? And this relates to this chart here that I've pulled from, I'll share the link in the chat. I can't remember exactly where. This is the realized price of Bitcoin, right? And the realized price is effectively, it is the average buy price of all current Bitcoin holders, right? So you can draw an average, and you see here that on this chart, you can plot this average. It's almost like a moving average that moves below price, right? So at the moment, you can see that actually on an average, the average Bitcoin buy price is lower than where price is now. Now, why do I draw your attention to that? Because all previous bear markets have only bottomed when Bitcoin spends not only considerable time, but considerable drawdown in price below the realized price, right? And that makes sense from a market dynamics perspective. When you think about it, like you're bringing the average, like price is going below the average buy price, like maximum fear, maximum like, oh, it's a failed experiment, Bitcoin is over, like it's dead, maximum FUD, right? That's where the market is. And I just don't think we're there yet, right? You look at previous cycles, we spent 120 days below, 300 days below, 140 days below, 179 days below. This cycle so far, 0 days below, right? We have not gone below it. The drawdown below those levels, we went 58% below. We went 49% below. We went 47% below. We went 34% below, right? The realized price as things stand is at about 55K. We have not traded below 55K yet since Bitcoin put in that high, right? Extrapolating that data, again, being dubious, as we like to be dubious, you bring it down about 35%, 30%, which is what we spoke about, up here when I drew my figures out. that brings us to about, this kind of like 40K, 38K level, which is again kind of where we've been looking this entire time. So yeah, look, it's all dubious. It's all a bit of fun. I don't think anyone is yeeting their net worth on this, but at the end of the day, like, we can only go on past data, and we can only kind of draw conclusions based on what we have. And even though the data set is small, I still think you can look at it and make some interesting observations. And those observations lead me to think that the bottom probably isn't in, and it'll probably come sometime later this year and sometime around the 40K level. That's basically what I have.
Guys, he gave you stop, entry, target. What else did you ask for? He came with receipts. He came with notes. A few things I want to comment on, because we're very much on the same page here. I think similar to what we're seeing with decreased downside each subsequent bear market, we're seeing the same thing to the upside as well, right? Each bull market has diminishing returns for Bitcoin. This is natural in the maturation of this asset within this asset class. To your point about things being dubious, it's a small sample size. Still, every time so far, it's been the exact same as the prior cycles. Crypto people love the phrase, this time it's different. And up until now, it appears this time is not different. It's never been different so far. The 4-year cycle is something we're still adhering to. These bull and bear trends where we kind of go up for 2.5, 3 years, down for a year, just like your data suggests. And the other thing we can't forget here is we've broken structure officially on the monthly time frame, right? So while I do agree that that means that, I believe that that's just confirmation that more downside is to come. It's a monthly structure break. That's a very significant change. One of the comments here was they think it's closer than many people think. And that is where I agree. We topped in October. We are actually, in fact, several months into this bear market, and we're greater than 50% off the high. I don't think it's over yet, but I do think we are further along than perhaps many people think. What about you, Ponzi?
Yeah, that's important to mention, because like this is now, adhering to our investors who are dollar cost averagers. The risk reward to buying Bitcoin at 70,000 is still there. Whether you get the bottom or not, it's a great spot to dollar cost average for the next few months and just continue adding to your long-term bags if you are an investor and believer in the tech, in the coin, in the sovereign wealth. That being said, I think we are closer to a bottom than not, and I will shift my attitude to longing dips as they come around. Whether I swing hold them or I scalp them, I favor longs over shorts in general. Obviously, I'm playing the extreme to either direction, and whichever the market gives me, I'll take. But yeah, 49 through 60, I'm taking on some
good value.
It's
good value. I mean, I use the fib retracement tool every bear market. I pull from the all-time low or the bear market low to the previous all-time high, and right in line with what Follis is showing here. That deep 61.8 to 78.6 retracement level has been where every single bear market has bottomed. Of course, past results don't guarantee future returns, but every time that has been an area, high time frame, where accumulating Bitcoin has been good value. It's not giving you the Pico low, but it's getting you pretty close. And if the next Bitcoin bull run takes us to 500,000, whatever, buying 50K or 40K, you're not really going to notice the difference at that point. It's about getting close, catching the meat of the move. And I agree, we're getting closer, but I still think there's a little bit and that's part of the reason why I think at some point a serious counter trend rally, because I wouldn't say we've had a serious counter trend rally, really. No. I mean, this has been, if this range fails, as Follis showed here, we haven't really had that big, crazy counter trend rally that we've had in prior bear markets. Maybe one of those is due, and that's enough to get people caught up into the idea that the low's in, and then that gives us the juice for our final drawdown. So we've been talking very high time frame here. Spot Bitcoin. I think we're all bullish Bitcoin long term. Let's talk about some stuff we're looking at this week. So I want to touch on kind of what Follis said, where we're still in this range. So I know many people who trade crypto. I'm a boomer. Follis alluded to how old I am. So I primarily trade Bitcoin. That's my favorite coin to trade and to accumulate. But I know a lot of people are much more interested in altcoins. So are there any alts, Follis, Ponzi, that are catching your eye, whether it be for a short-term opportunity? Some of these alts on the high time frame charts, it's like, how much lower can they go? The answer is always another 90% down. But is there anything that's jumping out at you?
Follis, go ahead.
Good question. Is there anything? You guys spoke about hype already. Maybe that's a chart we can look at because that's also something I'm bullish on. I think that like the funny thing about crypto cycles, like and Mayne, because you are so old, maybe you will remember, 2017. You'll remember like the coins that were in the top 5 back then. We had like things like Dash and a bunch of coins like Neo that aren't even relevant anymore. They're like probably like minus 99% from the highs. And I think that a similar thing is, this cycle is no different. A lot of the coins that people love now, a lot of the coins that people hold now are just going to fade into obscurity. They're going to go, as you say, minus 90% and minus 90% again, probably next cycle. And they're not going to be relevant. They're not going to give that upside price action, that opportunity that people want. So one of the questions that people are asking is like, what are the coins that you can look at now, or that you can seek to accumulate now with the, not even the expectation, but like, with the probability that they're not going to just be around next cycle, but they're going to appreciate to a significant degree next cycle and potentially give you some great returns. And I think like hype has to be at the top of most people's lists, right? It has to be one of those coins now that you're looking at in the same way that people look at Solana or people look at Ethereum, right? One of these coins that is going to maintain its relevancy and probably give some good chances for price appreciation into the next cycle. So I actually have this is my low time frame chart. We were just looking at some range breakout ideas on stream the other day, and I guess this did end up playing out. Whether or not we continue for this liquidity is another question. I want to just look at, this is probably a funny chart to look at insofar as it's basically a front run chart. These were my like high time frame buy orders for hype that I set back at the start of the year. So I set these when hype was trading at about $26. So right around the price that you mentioned Arthur Hayes buying. I think his average buy price is 25. So right around his entrance price. And at the time, hype had been trending down. It was like minus 55, minus 60% from the high. I was 90% sure we were going to get this sub 20 retest, this 79 fib. We were going to run the 10th of October low and kind of do something like this. And I had some orders set at, I think it was like $16.5 or maybe even $17. And I got front ran. And since then, hype is, almost 2x. It's like 84% higher. And my orders are sitting there looking very sad and lonely. Do I think that we get sub 20 hype eventually? I don't have as much conviction in that as I do in my Bitcoin idea. I also think we're going to get like $1,000 Ethereum. And I have a chart.
Oh my God,
for
what
that
a
too.
dream that would be.
Yeah, I think that Ethereum is going to trade. I think these equal lows are going to get taken. I think we're going to get like, I think we're going to get like 1,000, maybe $1,100 Ethereum. I think we're going to hit this anchored VWAP level from this 2018 high. And I think we're going to get something like that on Ethereum. What about hype? I just don't know. I honestly, it's one of those coins that could just run away and no one gets the sub 20 retest that a lot of people seem to be waiting for, myself included. So yeah, I'm happy to talk about hype, but I have been front ran on this pretty badly, so I'm a little bit tilted and kind of looking for new ideas at this point.
Yeah, that happens, man. I was able to snag hype pretty low earlier this year, which I'm pretty excited about. But it's one of those things, man. Like you said, you anticipated those levels. You also have to keep in mind when you put together those theses that hype is the shiny thing of the cycle. So any downside that you get alongside watching actual revenues accrue on Hyperliquid and adoption, new users, volume increases, you kind of have to readjust that price thesis you once had, which makes it a little more dynamic in that sense. But yeah, I'm pretty excited for $1,000 Ethereum. Speaking of Ethereum, I'd love to pull up this chart and show you guys what I'm seeing on a lower time frame, number one, and number two, what I'm seeing on a higher time frame. Lower time frame, speaking of this week, I still think this is a really nice looking chart in the sense that we have a lot of fair value to get filled up here, and this is several attempts at these range highs, right? 1, 2, 3, 4, almost 5 at this point. That leads me to believe we get a nice little pop. Whether that's a fade or not, I still want to capture that. Whether it's headline driven, whatever it is, this tells me higher. And I know your range highs, in theory, you have to stuff this. It is a Sunday, so I just took a soul short that I plan on unwinding tomorrow. But this, in my opinion, whether it comes back down here or whatever, it's inevitable that it gives us a solid equal move, an equal measured move to about 2,500, maybe 2,400, something along the lines. In terms of other altcoins that I'm keeping in mind, something that I've been watching for the last 2 weeks that has grabbed my attention aggressively ever since the Citadel news has been Layer Zero. The Citadel news was Layer Zero partnering with Citadel and ARK Invest to onboard real world assets to their new Layer One. With that, if you take a look and really zoom out on this chart, it's been pretty abysmal since 2025 with almost 90% drawdowns. Current valuation sitting at 660 million market cap with about 1.1 billion in FDV. And Citadel and ARK Invest both have some firepower, both in terms of social capital and financial capital. I think this trades higher. And I think as we start to see more real world assets enter the crypto landscape, they're not going to just slow down and they're going to keep building. So I've been trading this for the last week. It's been pretty fun. It has a lot more volatility, obviously sizing down. And with perps on NATO, I've been able to scalp this pretty aggressively. It's been a ball. Besides that, run it.
No, go for it. So I was just going to say, like, one of the things that's interesting here, you know, you're going over ZRO hype and you see sometimes these asymmetric moves in crypto where maybe Bitcoin's doing nothing, Bitcoin's going down, the whole market looks bad, but then there's one coin that looks interesting and it seems to be counter trend everything else. Hype has played that role a lot. It's seemingly recently. This is one of the best things about trading crypto, in my opinion, that differentiates it so much from traditional markets where, you know, you want to short equities, you're picking the Dow, the NASDAQ, the S&P 500. Maybe you're just trying to pick which one's going to go down the most. They're all going down. You know, you're looking at Euro USD, you're looking at, you know, pound dollar, a lot of similarities there in terms of how those move. Crypto is one of those markets where we can truly have these outliers where one coin can be in a bull run on its own in a vacuum where the rest of the market kind of looks crappy. So something that Follis brought up, and I think this will be a great place to maybe wrap up the guest segment here. He mentioned looking at the historical snapshot of altcoins. So one of the most common tropes for crypto, right, is you're going to get rich with altcoins, when in reality, it's almost the exact opposite. Most people lose all their money on altcoins. And they would have been better off holding Bitcoin on its own. If you look at pretty much any altcoin chart versus Bitcoin, which would just show you the relative strength, pretty much all of them are in a long-term downtrend, slowly towards zero. It's that roller coaster of doom meme. Pretty much all of them. There are periods where they outperform Bitcoin, but really Bitcoin has these 3-year-long uptrends, 1-year-long downtrends. Altcoins generally go up for a year and then they go down for 3 years or the rest of eternity. So, question for each of the people on this panel here. What do you think were the top 5 coins at all-time high last cycle? So November 2021.
What was Bitcoin's price November 2021?
60K.
We for sure had BTC, ETH, Solana, XRP, BNB.
Could it have been like, was it like Luna and AVAX? Remember there was that Sol Luna AVAX rotation in 2021 where it was like one would pump and then the next would pump and then the next would pump, and it was really, really predictable and everyone was making a ton of money.
That was the Osaka special.
So what you're going to see here, if you hop over to my chart, I've actually pulled this up. This is a really fun thought experiment that everyone can do here. You can go look at the historical snapshot of any year back to like 2011 on CoinMarketCap here. So look at some of these names, not just the names though. Look at some of the prices.
Wait, we don't have
Ethereum was
it up,
at 4,300. Oh, can you not see that?
No, we're seeing your trading view chart at the moment.
Okay, well, if you go on CoinMarketCap, it's okay. You can actually see. I'll read them out to you. We had Ethereum at 4,300. We had Binance Coin at $600. We had Cardano at 160. XRP just under $1. How about Polkadot at 35 bucks? The vast majority of the coins that are in the top 10 prior cycle are basically nothing burgers now. If you go back one more cycle before that, top coins were Bitcoin Cash, Litecoin, Cardano, IOTA, Dash, Monero, Bitcoin Gold. So really what this shows you, and I think ETH is the perfect example of this, is the vast majority of altcoins are doomed to look like this chart. Well, they'll have periods of outperformance, but you're generally much better off just holding Bitcoin. And a lot of these coins that you thought were the new hot thing this cycle, they're going to be irrelevant next time go around. There are outliers. And to kind of bring it all back, I think hype potentially has that ability to be one of those outliers that actually makes a new all-time high more than once. Many of these altcoins will make an all-time high one time, never again. I think Hype, based on the revenue that they're doing, the volume, they're kind of a trailblazer for DEXs in that way, could potentially break the curse here. But I remain a Bitcoin maxi in my old age for this reason, because I thought many of these coins last cycle that were bullish were going to be bullish again next cycle, and it just wasn't the case. We're wrapping up on the guest segment here. Follis, any closing thoughts for us?
No, I think you hit the nail on the head there. I mean, like, it's one of those realities of crypto that kind of maybe takes people a year or two to realize, you trade alts and you stack sats, right? You trade your altcoins in order to generate the cash flow you need to buy as much Bitcoin as possible, and then you do a Michael Saylor on it. Maybe you just hold your Bitcoin. At least you hold on to it long term and maybe see it as more of an investment in the future rather than these short term leverage plays necessarily. But yeah, I mean, like, I made a post the other day. It was like I was looking at like ADA. It's like minus 93% from the highs. Looking at from like the 2021 highs. Looking at Polkadot, it's like minus 97% in the highs. You just imagine, like, the average, I don't know, the average Joe crypto investor who like joined in the euphoria of 2021, as I did, and like, put their $100 or $1,000, whatever it is, and just bought the top, and that thing is worth, $30 now or $70 or whatever. And people ask, like, oh, crypto is so much opportunity, so much chance. Why do you guys crash out? They crash out because of altcoins. They join crypto with the promise, like, altcoins will make you rich. Look at the returns on these things. They buy the wrong coin, they invest their capital in the wrong place, and then, boom, it's minus 90%, and it's another minus 90% on top of that. So yeah, you hit the nail on the head there, man. It's like, if you believe in crypto, you believe in Bitcoin, and that's the only coin that we can be 100% sure will still be here next cycle, and very likely to appreciate in price and give you the returns that you want.
Awesome, man. Thank you so much for coming on as our first guest, inaugural episode of the Crypto Closeout. Thank you, Follis. We'll see you soon, buddy.
Thanks, guys. Cheers.
Cheers, brother. Wow.
Awesome.
What a lad, huh?
Future guest. You got some work to do. He came with notes, he came with receipts, he came with stop entry target for Bitcoin spot buys. Unbelievable stuff. So thank you so much to Follis. We've got another 15 minutes here to talk about maybe some of the stuff I think I want to focus on for this week, short term. So I'll kind of give you my thoughts on the setups that I'm looking for. And then again, I'd love to go back to your charts, and we can
also, there's a few people in the comments who want to see some coins whenever you want to get to that. I'll tell
sure.
you,
Well, why don't we start with that? I know someone had mentioned, why would Hype be any different from all other altcoins? I think the simplest reason is because Hype is an actual product that makes revenue. Not only do they make revenue, they use a large amount of that revenue, I think it's over 90%, to buy back their own token. So it's a buy burn mechanic that works. It's an extremely profitable company. A lot of these other altcoins that we mentioned, they're complete fugazi. There was no business. There is no revenue. If you do look at the few coins, protocols that do make money, those are the ones that do have the best potential to have staying power. Hype is in a class of its own in that regard. Yeah. Another coin you can look at is BNB, right? BNB is effectively the engine of Binance, and BNB has been a coin that has survived cycle after cycle, managed to hold its own. But on the whole, altcoins generally underperform Bitcoin. Of course, there's exceptions. Exceptions don't make the rule. What were some of these coin suggestions? I saw
XRP number one.
XRP.
Yeah.
So XRP is one of these coins that has this cult-like following, and I think once you get bitten by the XRP bug, you're in it forever. For those that don't know, I think XRP maxis believe that XRP is going to replace the financial rails of the planet. Everyone is going to be transacting on XRP to send money internationally between banks, between vendors. I personally think it's much more likely that as crypto and blockchain gets more adopted, by mainstream, by traditional finance. We're already seeing this. These companies will create their own stable coins. It's already happening. You'll have a JP Morgan stable coin, and that's what they'll use for all their interbank settlements. The idea that they're going to use XRP and make all of these people who have been holding this coin for years rich, I don't know. I disagree. Now, is this a chart you can trade? Absolutely. This has had many, many rips and then consequent dips. The chart I want you to look at when you're looking at any altcoin is always it versus Bitcoin, because this chart basically demonstrates whether or not you're better off holding the numerator, which in this case is XRP, the altcoin, or the denominator, which is Bitcoin. If you're an FX or a futures trader, if you're trading the Euro USD, right, you might look at what the dollar, the Dixie, is doing. You might look what Euro and GBP is doing, and then try and use cross-market analysis to determine, should you long Euro, should you long the pound, should you be long dollars? You can do the same thing with crypto. You can chart any coin against another coin, and you definitely should be charting your altcoins versus Bitcoin, regardless of the fact that XRP has gone up multiple times and it had a big rally this year. I think this chart speaks for itself. You're getting smoked by Bitcoin. You would be better off almost always holding Bitcoin rather than XRP. In terms of short term, can this thing go up? Is there trade opportunity here? I think that we're seeing a bit of a bounce here, but I just find this kind of chart, I don't know about you, really hard to trade. Like, there's just nothing here. So if I'm interested in this coin, I need to see, like, I don't know, a low get reclaimed.
Yeah.
Something like that. That gives me a high conviction trade. It gives me an invalidation, but this is a chart I've never enjoyed trading, and I personally don't buy into the XRP hype, and, you know, lambast me all you want for it.
No, I'm the same. I think we have the same thought process on XRP. That being said, don't go away yet. Someone wants to see CRO, Crypto.com's native token.
CRO. Let's take a look.
I haven't traded that in years, man.
No, I did have this credit card for a while though.
Me too.
And I think that was the only
change
reason
the world.
why I held the token, because to get a certain color card, you had to hold so many tokens. So this is a good example of a lot of altcoins right now where they look like, hey, is this looking bottomed? You know, you got that little devil on your shoulder saying this thing's bottomed. Like, this thing's down 90%, not quite, high 80s, mid to high 80s from the high. It's down a lot. It's like, well, how much lower can it go? That's the wonderful thing about math, is it can always go lower. This coin, even though it's down 85%, it can go down another 50%. You're like, how does that make any sense? Well, it's because it's relative, right? The numbers are relative. It could go down another 50% from here. I think a lot of altcoins have very similar structure to CRO right now, similar to XRP. I'm like, show me that there's actual strength. Until we get above this prior price floor, I'm going to assume whatever this results in is just a bearish retest, just like we had, you know, here, for example, right? There's your prior low, big rally right into that prior low, just like we had here. Big rally into that prior low. I'm going to assume that this is the same until proven otherwise. If we can reclaim one of these prior price floors, then I might be interested.
I like it. Simple, easy.
Yeah. And I think, again, like, there's a lot of risk in trying to pick bottoms on altcoins when you're unsure if Bitcoin is bottomed. I think the best way to trade altcoins is if you believe that Bitcoin is going to go up to an area of support, now go look and see if altcoins are also at support. Maybe you get an outsized higher beta move that way. But if you're like, hey, Bitcoin's going to 40K, I don't know why you're trying to buy spot altcoins yet, because that likely means that there's some more pain coming.
Yeah. Speaking of trying to call bottoms, here I am trying to call bottom on Lighter Coin. If you can pull up my screen, you'll see this beautiful setup of how it's been going down. Only for anybody who doesn't know, Lighter is the competitor to Hyperliquid. They airdropped infinite amount of tokens to everybody. Everybody was rich, probably sold most of the token, and this is the result. Down bad. However, high reward, high risk setup that I've got going on here. I really don't think there's going to be new lows put into this token. And it's a pretty easy setup. Small position size gives me a very high reward. It still is a venue that is proving itself, and people are trading there. Obviously, volume and TVL are down a lot, but I like the setup. I honestly don't love it. I kind of have a cognitive bias towards it, but I liked it up until this weekend. Really, this weekend really pissed me off. As we can see, a lot of the demand is not real, or at least met with infinite sellers, airdrop sellers. I don't hold my airdrop anymore. I'm trading this thing in perps now on NATO, which is Inc.'s native perp dex. But ideally, stop and profit scenario where the round trip doesn't matter because I'm earning points on NATO and the setup is there. So this is me trying to call bottom, which never really works too well.
You know, girl math, right? When you take your wife or your fiance or girlfriend, some of you crypto guys might not know what that is, but they exist. And they're like, oh, well, you know, I returned this and then I used the money I got from the return to buy something. So my coffee was free. This is trader math, where it's like, even if I lose money on this trade, I'm farming points on the DEX. So it's a win-win, literally can't lose. And those are the best kind of trades, really, aren't they? The ones that you quite literally can't lose.
Yeah, I will mention DEXs and rewards and points have completely changed the expected value landscape, because obviously it's an extremely negative sum game. And if you're trading, fighting fees, fighting slippage, your negative sum, it's pretty negative EV to be a trader in general. But essentially with these point reward systems that we've been seeing in the landscape for the last year, you kind of get a rebate on all your trading. And so round tripping goes from being a negative EV activity to a positive EV activity, and allows you to actually capture more value than anywhere else. So shout out NATO for allowing me to do that right now.
So I think this is a very interesting point for maybe people in the audience who aren't crypto natives. There's a lot of ways to make money in crypto without trading. Obviously, this shows about the markets, what we think going into the week for actual cryptos that we're looking at, trade opportunities, buying spot. But there's a multitude of ways in which you can participate and engage with the crypto markets without having a directional bias. You're like, oh, I think this coin's going to go up. Maybe you just have that coin because you need it to interact with a certain protocol. And with a company like Kraken, they're getting so wide in terms of their product offering, where you can be a neophyte crypto trader, but you can use Kraken to collect yield, to swap in and out of spot, to do a dozen different things that don't actually require you to be in the charts like we are, trying to catch these small moves, trade every single direction. So I think if you're someone who's trading futures, trading TradFi, and you're not at least looking at crypto, let alone for the 365 trading on the weekend, especially during times of global uncertainty, where, you know, the president can send out a tweet Friday night, and then, you know, when the Iran strike happened, that move was available in crypto on Saturday. Like, you didn't get to take that trade. Bitcoin had that dip to 63 and then it rallied 10K. That was a weekend move. You're only doing that in crypto. But all the other things, getting the yield, the things that you can do on places like Kraken, Lighter, NATO, collecting points, collecting airdrops. It's really, really cool. And I think more and more of you should probably look into it.
This is the time to look into it, what we call a bear market, right? Learn now.
Build in the bear. Like, if you're finding crypto now, that's awesome, right? Because we're at deep discounted prices. You don't want to be the person who's finding crypto when the president is talking about it and he's launching his own meme coin. That means you're late to the party. Now all the stuff that you're seeing on the media, the news, is that crypto's dead. That was the last cycle. It didn't do what it was supposed to do. This is the kind of thing you need. And the term in crypto is go out and touch grass during times like this, but it's actually quite the opposite. Now, in my opinion, is the time to be paying attention, to be looking for opportunities, because just by being around, this is when, you know, later in this cycle, people call you lucky because you bought Bitcoin at 50K. Well, you were just paying attention, right? So we've got a couple minutes left here to close out. Any last thoughts on the market going into this week? I saw some news around, you know, some increased military presence around Taiwan. Do you think China is maybe going to use that as an opportunity with what's going on with Iran and the US to do something there? Does that affect the markets?
Look, I think there's lots of headline risk right now. The market's really emotional in both directions, and we're going to keep seeing headline volatility throughout the entire week. And that's important when you're putting on positions in this type of landscape. With that being said, I still think the things that we're most prone to are downside headline risk, not so much upside headline risk, besides the straight opening up. I haven't been tapped into Taiwan and China as I've been enjoying my weekend. So I'll leave that for tomorrow's problem. Today's problem
I
is
follow you on Instagram. I know you're enjoying yourself. It is quite funny. I mean, I think I agree with you. Like, we've had a lot of good news that seemingly had no effect. I mean, Kraken getting into the rails of the Federal Reserve is huge, macro for crypto. But we're not seeing that short term. When in a bull run, any sort of good headline, you see that bounce, you see that immediate reaction. Whereas here, it seems like upside news, we get nothing. Any sort of negative downside news, we see that, wholeheartedly. So I agree. A lot of headline risk, bit of a tricky market to trade right now, but ultimately, I think this is a very good time to be paying attention to crypto because we're getting those deep discount prices on Bitcoin that everyone dreams of when it's trading significantly higher. And they go, oh, I wish I would have just bought sooner. We're approaching those levels, in my opinion, now, and will be further into this year. So I think a lot going on. I'm very excited for this show to not just get started, but where it's going to be a few months from now when we ultimately buy the low live on stream. And then we just are showered with adoration for being the Giga Chad Pico bottom buyers in front of all these viewers. But yeah, that's all I got, man. I think this has been a fantastic episode. I saw one comment here about, you haven't traded crypto since 2022. Do you still have to trade from a wallet and send it to an exchange? Here's a great opportunity for me to plug Breakout. You can trade with a prop firm like Breakout. If you're already familiar with props like FTMO, companies that work with Ninja, Breakout is a crypto-specific prop firm. You can sign up with your credit card, trade crypto in a familiar experience with prop rules, and you don't have to worry about dealing with a centralized exchange or any of that stuff. But I highly recommend you do look into self-custody. I think it's something that's going to be part of the future, whether you like it or not. Good to pay attention to and to learn. Awesome. Well, that has been it, everyone, for the Crypto Closeout episode 1. We hope you enjoyed. Please let us know in the comments. Make sure you're following NinjaTrader Live, NinjaTrader, Kraken on all socials. My name is Trader Mayne. This has been Ponzi. We will catch you guys next week.